Good morning, guys. Welcome to the Trade for a Living podcast, where we're looking about what can we do to make dollars consistently. And so today we've got Bitcoin. So irrespective, and this is the beauty about trading as opposed to investing or hodling coins, is even if it goes down, we can be making some good money, and that is what we're on about. So although Bitcoin has now broken some critical trends. The question is, are we going to go lower? How low can we go? What's the story? Are we going to bounce now? And those things will be answered in the stream this afternoon, where we're going to be looking at the macro view and so forth. So let's keep this on point and let's look at the trades. So last week's trades, real quick. I'm going to dive into a 4-hour time frame. This was basically where we went short on BTC, and those TPs have all now been hit. So since 56, I'm no longer in any BTC shorts, which could predictamentally feel like it's horrible because we are now tickling the $48,000 range with BTC. But for me, trading is about making money, not necessarily being in the right move forever, because that is not making money consistently. So what do we want to do? We want to trade this week. I would suggest that you stay bearish. Although the macro things are still bullish, I would suggest that we need to keep on trading with the bearish momentum. So if you want to be trading, please try and look for the upside in the market and try and short that, because there's a lot of fear and uncertainty in the market, and it's not from the trader point of view. So if you look at the liquidations, it's not the liquidations that's currently being the driving force. It is actually the long-term or the short-term spot holders. The short-term spot holder average price is sitting around 65, and currently Bitcoin is sitting at 50. So you have a scenario where the market is, there's a lot of fear and uncertainty. Even when you start looking at the stock markets, there's a little bit of a retrace. But remember now, as I explained, these kind of moves, it can go all the way to that red line. It's fine, because this is where the macro divergence is at. And I know everybody's talking from a stock market point of view that the interest rates are going to turn around and it's time. And it all boils down to this chart, where when we look at this from point of view is once the Fed pivots, once the Fed decides to change its monetary policy, remember now, it's raising the rates, now they're talking about dropping the rates. Everybody expects the market now to crash down, but as you see, the pivot happens, and the recession only happens that much later. Statistically, there's one outlier, and where we had this one here, and the stocks just kept on rallying irrespective. So that's all that you need to take from this. So from this point of view, the Fed is about to maybe start implementing a pivot, but once the pivot happens, the market does have a way to still look for a little bit more exit liquidity before the real dump happens. So that might be a driving force, and that's why we always say, I take things level by level, not necessarily trying to predict what's going to be in the future, because if you predict, you're going to act on that prediction. And this means be bullish way too long for your own health, or bearish way too long for your own health. And trading, your prediction doesn't mean anything. We take it level for level, or level by level. Okay, so over to the charts. Let's quickly then have a look at this. So from a liquidity point of view, you can see there's not a lot driving. The market's kind of empty. And that's why you're getting these big candles, low liquidity spike candles, because there's not a lot of resistance. The buying has been exhausted. So in that sense, these bottoms will get tested. So a Bitcoin back at 50, a Bitcoin below 48 is a reality again, but it will probably first go back to 60 almost, to kind of trap people in the market even further and just drive this emotional market cycle home for everybody. Last week on the mainstream, I'm talking to you guys, I'm worried, and it might be that we're running into a complacency. And now it's played out. Now anxiety is probably in the market. People are very anxious at the moment. Denial, panic, and capitulation is probably still to follow. So there's still a lot more. And this brings me to why I made the headline. This strong trend will prove easy gains. Because when you move into this environment, the market will be paying you really well if you position yourself right accordingly. Okay, so let's have a look at a few more of our trades from last week shared in the Discord. We went short in Ethereum there. I added to my short there. I can expand the screen a little bit. So the market has gone and surpassed all the TPs, and this thing is just tanked to the floor. The same for Solana. We went short Solana in this area over here, and at the moment we are TP3 close to TP4. Now, from the hodl streams, if any of you guys watch this, there's a reason I don't want to see it going to 94, but at the moment there's a strong possibility if that happens, then your Solana is going to go back to $50, $40, $30, $20. Not to try and predict too much, but this is the power, which means then you want to build in the bearish direction, because clearly the market is now reached the point of, from euphoria into capitulation, and the other emotions need to now play out. We need the rest of this to play out before the market's going to move on. Okay, so taking this over to the trade idea and where we want to try and go towards, I'm going to start with Ethereum, because Ethereum is the stronger second alt. Simple as that. BTC, is the rising tide that rises all the ships. And if Bitcoin is going to do what it's doing at the moment, your Ethereum is going to be dumping so hard as well. So when we look at Ethereum, you can see that there was a complete shakeout of this original area. So from a daily point of view, what do we have? No hidden bullish divergence, nothing to suggest that this is over. So we want to be trading with the continuation of this. So what we're looking for is anywhere between 3,000 and 2,800. The market will kind of creep its way into that zone, and that's where you want to be hunting for your short. So for today, it's a little tricky. That's why I spend a lot of time talking about markets if and buts, because if you want to hit the short, you want to trade with momentum. Any shorts you take at this given stage is probably just going to be scalps. A nice swing is going to happen a little bit later during the week, for that matter. Diving this into a 4-hour time frame, just to kind of see if there's any reason to support this theory. You can clearly see that there's no divergence as of yet within this wave. It's not done. It's not done selling off. So what we're trying to look for is just a reasonable area for where that momentum is going to go on. Now, what your opponent's going to be looking at is most of them will be looking at moving averages. So if you're looking at from a short-term play moving average, you can clearly see that your trend now is down, your momentum is down, and your support for that is down. So the market has now created an alignment as such, something like that, an alignment of such. So the hope is that the retrace now will come back, but not lose the support for bearishness. Because if it does, then we're going to go into another confusion where all the moving averages overlap each other. So when we have this and a price now stays below these critical areas, that's why we're looking at those areas, you will have a scenario now where you can have prolonged moves in that direction, short-term play-wise. If we look at the moving averages from a long-term perspective, you can clearly see that momentum is still only starting. So if this happens, that the short-term analysis stays below this $3,000, your long-term momentum will start crossing below the trend, and the trend will start moving down. And now we've also then kind of resolved the confusion in the market with all this moving averages lapping over each other. So then you can start planning in for a longer term correction, a scenario of something like this. And that's where the massive pays are going to happen. So we need to see whether the market's going to be quieting down enough so that happens and we can start enjoying that trend. It's still a little early from a moving average point of view. Bollinger Band wise, if we look at this now, remember we're trying to identify extremes within the daily ranges, and that's what the Bollinger Band does really well. So if you look at this price action, I'm trying to look for from the last time we were at this price to why we are where we're now back there again. You can see that from the Bollinger point of view, we're in a scenario where the most amount of volume has been spent here. Okay, so that is where this can now be argued a distribution occurred. So yet again, the bottom of that range, that area where we were hopeful that support was going to hold, that now will turn resistance. So wait for price to fall into this volume gap here, or reclaim back that volume, because that is when the real additional short momentum is going to be coming your way. So that just brings us back to that area that you need to be patient. You need to patiently wait for the pullback, and then you can add in on the short. Okay. In addition to this, if I start bringing in a little bit more information, you can see that there's a lot of volume spent and a lot of money was spent to drive price here. So this would be the first area where realistic support will come into the market, meaning that if there's, and if you can buy the argument that there's manipulation in the market, it's fine. The fact that there is manipulation means that now there's a statistical advantage to us. We just need to be able to see that in the charts. So where we are now, you can clearly see that this means that where we're at, a lot of money was spent to defend this price bracket. So be patient with this, and let's see and wait for price to move into a smaller area. Heading over to the Ichimoku side of things, and I'm just going to take away all the brush strokes so that I can get to that real quick. Ichimoku side, we've got the same volume profile. You can clearly see that we're below the cloud now and moving strongly. But what I want to point out to you guys is that you can see that volume now has increased a lot above the moving average. And that's normally a really good sign when that happens and we break a certain support level, because then it means that that trend now has been established. Looking at downwards momentum there, once the big volume started kicking in, we had a longevity in the move. So we're probably in somewhere there where that big volume has now just started kicking in. It doesn't mean that you're at the end of the move. It doesn't mean that you're at the beginning of the move. You're mid-move, but mid-move trading-wise is always the best area to be. Now, the last setup is when we go for the Heikin-Ashi. And the argument is that Heikin-Ashi gives us a really good scenario where we can see where momentum is the strongest. And now that we're getting these flat bottom candles, you can see that that also occurred around the 2,800 area. So your Heikin-Ashi is now really strong. Support is below, support for the trend is below momentum. So wait for something like this to occur, and then you'll probably look for continuation should you be using the Heikin-Ashi system. Okay, there you have it, guys. So that's everything that I wanted to share. Remember, this afternoon stream, we're going to be looking at the macro views for BTC, what to do. There's, as I said in previous streams, there's even evidence for 42K BTC, and it makes statistically still, and it still leaves us statistically in the right area to expect bull market top only next year, 2025. Okay, so that's everything. I'm going to be continuing this journey on with everybody in the Discord. If you want to join, go to the Discord, links in the video description. Get your Prime account today. If you deposit more than $2,000 worth of trading capital, that's it. All you need to do, you send me, you open a little claim ticket access there. And if it's all as well, I'll give you access to the Discord. You can come trade and talk with me in there. Simple as that. For the rest of you guys, leave me comments, any questions, anything you want me to attach or discuss in the future streams. This is a long one. Tomorrow we'll be back at the 5-minute, 6-minute time cap. And that's it. So for the rest of you guys, have a lovely day and enjoy the fact that we've established trend. So don't look at it as a bad thing. Look at it as a thing that there's now strength, and it makes it easy. Easy gains can be had when there's a strong trend. Have a lovely day, guys. Cheers.
I'll keep hustling.
Subscribe now.